Hello, everyone. Welcome to Pbolic Notes. My name is Michael Kripchin, and today is Tuesday, February 15th, 2022. My video today is going to be on Bitcoin and Bitcoin's dominance. And what I'm also going to look at with you is the Fibonacci retracement of Bitcoin, because Bitcoin is such a great mathematical model. It's such a great mathematical tool that it's almost a perfect token to follow as far as the Fibonacci sequence is concerned. And I'd like to share that with you today. I do this often, and it helps me kind of understand how it behaves. So that this way we can kind of get an idea about what it's going to do over the next little while. Before I get started with my charts today, I'd like to just disclose I own Bitcoin. I started investing in Bitcoin only in 2021. Unfortunately, I missed the parabolic rallies and increases in prior years. And also, this is not a financial advice. So whatever I'm sharing here with you is my personal preference, my personal charting. And please do your own verifications, do your own research with your own financial advisors. I'd like to share with you my computer screen so that we can take a look and see what we are looking at today. So if I look at the Bitcoin chart, this is the weekly chart, and I marked here that we see really from sometime in the range of, let's say, December 2020 until today, looks like Bitcoin has been kind of hovering in this corridor of pricing, around hovering between $30,000 and on the low side, and also up to $66,000 US on the high side. So kind of these have been the support and resistance for this whole time span. And if I were to look at, let's say, what it's done as far as the daily movements, obviously it's done quite a bit of movements during this window. If I go down to December 2020, which is going to be on the daily chart somewhere around here, right? So it looks like, let's say on December 2nd, it was at $16,000 US, and then there was this spike. And at a certain point, it got to something in the range of approximately, let's say, started hovering then. So right about here, it got to, on January 1st, really December 30th, January 1st, 2020, it got to approximately 30,000 US dollars. Okay. So since then, if I put trend lines on a daily chart, we're going to see that it has been really hovering in this space for this entire period. Now, obviously, there's been a lot of profit-taking opportunities and a lot of money-losing opportunities during the same window, because I mean it's gone up quite a bit in this time span. I mean it's gone from 30,000 all the way up to 40,000 US dollars. Then it went down to 30,000, and then it did all kinds of movements. But in the whole thick of it, if somebody was holding Bitcoin over here, and if they did nothing, just sat on it, it means that they would have done a slight increase from, let's say, from 30,000 up to $45,000 US today. Meanwhile, if they were trading it, there was many opportunities to make and lose money. So that's why, looking at it this way on a weekly chart, I noticed this. And also, again, the 20-week SMA and the 21-week EMA seem to still be hovering below. Bitcoin seems to be below its 20-week simple moving average and also 21-week exponential moving average. So that's going to be a key period that I'm looking at right now over here. And let's see how this plays out over the next little while. I will remove these drawings, and I would like to share with you the Fib retracement, just to see kind of what happens if I look at the weekly chart of Bitcoin, and just to show how it's been really an excellent token for taking care of its really the Fibonacci retracements. It seems to be perfect with it following the supports and also the resistances, and kind of letting us know exactly where it's be going over the next little while. So with the Fibonacci retracements, there's different ways of doing it, but the way I like doing it is either taking at its kind of figuring out. So over here, I see that there's this wick right over here, which is like kind of the lowest point of where Bitcoin was at. So this was the lowest point on the graph, which was something around $105, believe it or not. So what I would like to do is I like to take this and bring it out all the way to the top and set the point right over here. And then afterwards, what I like to do is look on the, go at the next point where I see another low, and then start another Fibonacci retracement from that period and go to the next, again, go bring it over to the top again. And then I would like to repeat the process and just going up until the next, I guess, the higher lows, right? And then, so right over here, as I go higher, I notice that there's going to be another point here, which is going to be Bitcoin kind of right over here, making another higher low. And now what's going on here is we're seeing that some of these points are getting very thick. And these are the ones that we are seeing the exact same times, the exact same, points being hit all the time, which is very interesting. So I would repeat this process for as many times as I can. And then I will show you what's going to happen when I remove these points that may not be as repeating as the other times. So here, the reason why I'm doing this is that we're going to see some confluence between the actual different points that Bitcoin is hitting in its pricing. And right over here, as you're following my my chart here, we're going up, basically taking up finding the next higher lows, and then doing an extension, extension from there all the way to the highest point on our graph. And then what we see here is that right over here as well. So you see, I'm going down to the wick, right? So I'm going down to the wick because that's where Bitcoin had hit it's kind of like the price had hit that point. I'll be going up again right over here. So there's another wick right here. It's hitting it right about there. And there's another higher low over here. So you see, many of these points are repeating. This is very interesting, as you can see from this charts. And if I look at what we're seeing here is that, let's say if I put straight lines at the points that I'm seeing many times it being hit the exact same price points. For example, over here around $70,000, or right at around $7,000 US. This is an important point that I would like to mark. And then as I go lower right over here, it looks like over here as well, it seems to be hitting this price multiple times. And right over here as well. And here, which is approximately 36,000 US dollars, it seems to be hitting this as well. Now, again, as you notice, my chart is a logarithmic chart. So that's why we're able to see all these different points on my chart. So right over here, it looks like this is also a key point. As I come over here, it looks like this point was hit twice. So this, I would like to put an indicating line there as well. And then as I go lower, the other points don't seem to be occurring too many times. So it looks like we can be ignoring those other points. Yes, these other points are not happening those many times. So then what I would like to do is I'm going to then remove the points that are the Fibonacci extensions where only occurred once. I'm going to remove them that way because they seem to not be key points as far as the chart is concerned. I'll remove this as well. Okay, so what do we have here? I will remove this point as well. I just don't see this happening many times. So I can, no, actually, I will be removing this point as well. Okay, so as we observe our Fibonacci retracement and the extensions of these lines, we notice that the same points had occurred many, many times, right? So basically, right over here, if I look at the price points, around $33 US is a key point. Around $41,200 is a key point, because it seems to have also matched. You see, Bitcoin has hit this point of the pricing multiple times. If we look at what's going on our charting, it looks like over here, this point was tested multiple times. Over here, there's one high here. Then it broke it here, it became very bearish. Then it stayed in congestion over here. And then over here, it's at $42,000 US, again, a key point. So these are the kind of the points that we're going to be paying attention to. So let's say, for example, if I look at what Bitcoin is doing right now, it's at around 44,000 US dollars. It looks to be above this key period of $42,861. If I was a trader at this stage, and I see that it's already gone past this point, there's a very high possibility that the next resistance will be happening at something around the range of $50,000, right? So let's say if it goes to $50,000, and then afterwards it breaks that again, then there's a very high possibility that's going to get to $68,000. So I don't like listening to all these speculators and all these speakers that tell us, oh, Bitcoin's going to go to $100,000, $200,000, or $1 million. It's just not. It doesn't work like that. So obviously, eventually, it's going to go there, but we just don't know when. So I really like doing the Fibonacci extensions, because then it kind of gives us an idea about where it's going to be going. Because really, we see the way it's going to be behaving, and we also kind of have an idea about where it's be going for the next move. So right away around over here, if eventually Bitcoin broke this support line, which is $42,000 US, which is a very key point, and it would broke it, then all of a sudden it wouldn't surprise me if it goes down to $34,000, right? So those are all key items, key points, and it's important for us to kind of pay attention to this, because it's a perfect mathematical model. And it's going to be kind of following along. And there's a lot of traders. There's a lot of big accounts that are paying attention to these points, and they're going to be setting up their orders based on these extensions as well. So that's why it's important for us to pay attention to the Fibonacci extension, especially with Bitcoin, which is such a key mathematical model. I like to also show you another way I like to look at this is if I do my extensions, and then afterwards, if I take it and if I want to do the Fibonacci the Fibonacci trend-based kind of extension, because what I like to do is I like to also kind of get a projection of where it may go once it passes the actual, if it goes into a pricing territory where I don't see where it could be going. So right now, what I will do is I will then come back over here to my Fibonacci charts. And now I'm going to click on the Fibonacci trend-based extension. And then what I'm going to do is I'm going to go and again, find my lowest point, which is over here. And then I will go to a full, I guess it will be, the key thing is going to be for me to kind of look and see where the next high point was. And then from there, do a full retracement, which is right over here. So this should be a perfect model for us to kind of give us an idea about where it's be going for the next pricing. So what I mean is that, let's say if I want to do this and kind of get an idea about where I may be going over the next period. If I come over here again, go to this low and do a full cycle, make it where I'm going to be seeing where it's going. Again, I'm going to my Fibonacci extension. I'll be going to this point over here, and then bring it up to this high, and then afterwards do a full retracement. This could give me an idea about how it's going to be behaving as far as the pricing is concerned for the next pricing as far as Bitcoin is concerned. So by doing the Fibonacci, by actually doing the Fibonacci extension, it can also give me good ideas about how Bitcoin is behaving with the actual pricing for the price zones where I don't know. I haven't tested those price zones yet. So this is something that is very interesting for us to pay attention. I love using Fibonacci extensions for Bitcoin. It's the perfect model for it. I've already tested it in the past on Ethereum. It didn't work as well as Bitcoin did. And the Fibonacci retracement is something that another tool that we can use. Obviously, we gotta be cautious. It's not a perfect model, but it is something that we can use to kind of get an idea and not be totally surprised when we see the price drops and we see the price increases, to pay attention to what's going on, and then to realize, you know what, as we look at where the Fibonacci points are, then we'll have a good idea that, you know what, if I'm expecting, if this is an important a key price around 42,000 US, around $52,000 US, around $68,000 US, around $34,000 US, around $26,000 US. So once I see Bitcoin's price breaking the support lines and breaking this resistance lines, then for us not to be surprised and not to be shocked when Bitcoin does these kind of behaviors. So I hope you enjoyed this video, and I look forward to sharing the same kind of idea with other layer 1 protocols tomorrow. That we can do the same kind of test on the Fibonacci extensions with other layer 1s to see if it behaves in similar fashions as well. Thanks everyone for watching.